Today on the Income Flip podcast, I've got Will Harvey out of Richmond with Harvey Capital. Man, Will, thank you so much for joining the Income Flip podcast.
Thanks for having me, Rob. Excited to be here.
Well, dude, let's talk shop a little bit, right? How long have you been in the business now?
Well, I've been in real estate for about 10 years. I bought my first house in 2016 after I had gotten into the mortgage business, and was doing that whole thing for a while. Was buying townhouses in the Northern Virginia area, where I would live in it. I would live in it for a year, use a primary mortgage, low rate, and then I would move out, turn it into a rental. And I got to 3 houses and basically realized that I hate being a landlord.
You know what? That my best friend just came to that same realization after like 20 years of owning properties. He's like, he'd rather invest his own capital at this stage of the game. He's like, it just roofs leaking, HVACs like
exactly.
conking out. He's like, I'm over it, right? I just want to lend money. So you discovered, okay, I don't want to be a landlord. I want to do something different. So how did you pivot?
Yeah. So from there, I was actually listening to Some Bigger Pockets episode, and I was just learning how to put systems in place. I only had 3 rentals, but I was getting to the point where I wanted to scale further. I wanted to put systems in place so that it wasn't chaotic like you just described with roofs leaking and whatever else. And I got turned on to the idea of multifamily. And I went down that path and got involved with a few deals as a general partner. I had a pretty limited role as a general partner, but got involved with some there. And then after that, I really pivoted and focused passively investing in these syndications. So, I left the mortgage business right at the end of 2019 before COVID, and which in hindsight, I probably shouldn't have done because rates went down and all those guys were making a killing during COVID.
Well, it's funny, like probably right when COVID hit, you were like, I knew it! It was perfect timing.
Right.
And then like 2 months later, you're like, damn it!
That's exactly right. Yeah, I was still on the emails of the company I was at because I was just referring them business here and there, and I would see the leaderboard, and I just saw people that, no disrespect to them, they wouldn't do any volume, and all of a sudden everybody's volume was just through the roof, and it was just crazy. So, but anyway, so pivoted to what I was doing. My strategy at that time was basically I had a partner, and we started a house flipping company, and we were flipping houses. And what I would do, the portion of the income generated on my end, I would basically take it and put it into a passive syndication, like a 100-unit apartment building, with guys an operator that I trust. I liked doing that because, one, it allowed me to be hands off and still invest in real estate. And I would say the bigger reason at the time was the tax treatment. So when you're a house flipper, you don't get any kind of love from the IRS. Everything is just ordinary income. But because I was a full-time real estate investor, I'm able to take the bonus depreciation from these apartment investments and use it to offset my active income. So that was a cool strategy that I was doing at that time.
How did you end up pivoting into hard money private lending?
Yes, that's a little bit after that. So I was borrowing hard money at that time, and I really learned it, from the borrower's standpoint. And then a few years go by, I did a handful more flips, a couple syndications. I with partners bought a wedding venue and a boutique hotel, and I basically just got to where, I just realized that I really like being on the finance side of things. I love being an Excel. I don't like running properties. I don't like managing people, contractors, all that stuff. So I just gravitated towards the finance side. And in 2023, I created a fund. And our goal was, our goal at the time was to invest passively in different operators' deals. And we've done that. We've gotten involved with a few apartment builds and some mobile home parks. But at that time, we had some cash laying around that we didn't have a home for yet, while we were waiting to deploy it into, some like an equity deal. And I had some guys call me about hard money, and they're like, "Do you know anyone that does hard money?" And I was like, "Well, I'll do it. We can do a loan." So I started. It was sort of an accidental thing where I started making some loans to guys in my network that I knew. One of them was the first one was a no-brainer decision. A former coworker when I was in the mortgage business calls me, and he says, "Hey, I got this borrower. He's from another country. He can't qualify based on the rigorous, Fannie Freddie standards, but he makes great money where back home in his country, and he's putting down 75%." So he was like, "Do you want to do a loan in first lien position at 25 LTV?" And I was like, "That's a no-brainer." So we did a hard money loan, collected points and a good interest rate, and it worked for us. It worked for the borrower, and from there we just I did more and more of those, and then this past year I looked back and was like, hey, this has legs of its own. This is an awesome vehicle, and so I created a fund dedicated solely to doing hard money loans.
Dude, I love that. And I'm going to unpack a couple things for those that are listening right now. When you're on your journey as a real estate investor or as a real estate entrepreneur, there comes a time where you're going to taste things throughout the process, right? You're going to do some multifamily, you're going to do some syndications, you're going to be a landlord, you're going to flip houses, but eventually you're going to have to end up picking one, AKA cash machine, that you're going to say, you know what, I'm going to make my living out of this arm of real estate investing. Now, we call it building a cash machine and then building a wealth machine. I don't think anybody can truly find the one like straight away. I think you taste a couple things and then figure out which one suits you based on temperament, based on your unique skill sets, based on your network. And that's what I hear from you. It's like, hey, I did a number of things, right? I did some, wedding venue, flips, landlording, house hacking, but eventually, like mortgages, but eventually I landed on this hard money lending side. And so, dude, congrats.
That's exactly right.
Yeah, congrats on that, because it takes a while for people to like figure out where they fit in the world of real estate investing. I think it's a fortunate person that like knows day one, but I know I didn't know day one. It took me 5 years before I was like, okay, I think this is the one out of all the things I've tried, and now let me scale this one. And then it gives you permission to do some of the others, but you've got to scale one first.
That's exactly right, and that's took you 5 years. Took me almost 10 years. It was a few years ago when I started that fund. That was when it was like, this is what I'm meant to do. I'm not an operator. I'm not meant to do that. And I really, there's a quote. I don't know who said this originally, but I think it's really good. It goes, action produces information, and I just love that. And I learned from trial and error a lot of things that I don't like doing, and luckily, we were lucky to have success in those things, and I have lost money on deals, of course, but we were successful. We didn't have any catastrophic things happen or any fatal mistakes or anything like that. But I just realized over time what I'm good at, what I'm not good at, what I enjoy, what I don't enjoy. And I think that, for a while it was like I was just never really comfortable in my like real estate skin. It was like,
Yeah.
what am I in real estate? I don't really know what I'm doing here. I don't know what my thing is, what my focus is. I've done a bunch of stuff. I don't really like. I can't point to one thing and say that I really liked it. Like I've done a bunch of flips, and that's cool. It's a dopamine hit when you do a a flip and make a six-figure profit on it. That's awesome. But it just wasn't. I don't know. It just wasn't my thing. It was, and now that I'm in lending, it's like now I have figured out my thing. And lending is certainly not everyone's thing. A lot of guys
Yeah.
couldn't dream of doing. They would never want to do lending in a million years.
Yeah.
But I think
Well,
you just have
you
to figure
said
out what works.
you prefer to be in an Excel spreadsheet than out in the field, right? And I think that's telling. I think everybody has to take a self-assessment of their own interest and skill sets and background, and then you're like, this makes sense to me, right? This makes
Exactly.
sense. Let me ask you a question. You said you raised a fund. You started a fund essentially. You raised capital specifically for this, for hard money lending.
Yeah, yeah. We have an act. There's one that's open right now. That original fund that I mentioned that I started a few years ago is closed, but yeah, the hard money one is currently open.
Okay. Who mentored you or guided you through that process? How did you decide, you know what, like I'm going to set up a fund to do this, as opposed to doing kind of, per project and then you go raise the capital on that project?
Yeah, great question. So being a limited partner and investing in different funds and different individual properties gave me a lot of, I just figured out what I think makes the most sense. And I like the fund structure, especially in something like lending, because, when someone does a co-lending situation, which is what you described, where we have a borrower that needs money. We call an investor and say, hey, we need 200,000 for this project. You're going to invest. We're going to get a certain chunk. You're going to get the rest. And if this deal goes bad, you're not going to make anything. You could, if we foreclose and end up making money that way, then you potentially could. But while the borrower is in default, there's no money coming in. Whereas if you invest in a fund, currently I think we have 16 loans out right now. So someone that's, investing in a fund like that, from day one, they're spreading their capital out across 16 loans, 16 separate projects. If one of them goes bad, then the rest will hopefully smooth out the returns, and it's not as detrimental as
Yeah, you're diversifying.
You're diversified.
Risk.
Exactly.
Yeah, you're diversifying the risk across
Yep.
16 loans.
Yep. Exactly.
Are you in partnership with somebody on this, or are you doing this 100% on your own?
What do you mean by in partnership?
Meaning, is Harvey Capital owned 100% by you, right? Or do you have partners in that business?
No, it's just me. I have advisors, and that's another thing. I just realized that over the years I've had partners, and I've had great partners. I love all the partners that I've worked with. Like I mentioned, I had the house flipping company, and I've done a few syndications with partners. But I've just realized that I like being in sole control, and I like moving at a pace that I have found that other partners, don't.
There's different risk profiles. There's different ways to look at the deal, right? There's just so different. And
exactly. And I have that's not to say I have advisors. We have a couple. We have a couple guys overseas that work. We have an awesome loan processor. He's actually based in India, and we have a great team. But yeah, no partners.
Okay, cool. So for those that are listening, because what I love to do is bring a lot of our frameworks, pull our frameworks out in the story, your personal journey, right? So what I'm hearing you say is that you've discovered your kind of like your one avatar that you're going to focus on, like one offer, one avatar, one offer, one core, product. You might diversify that a little bit, but where do you want to take this business? Like overall, do you want to continue building, this into a multi-state business? You want to do it locally? Do you want to take the profits of this particular business and buy? It doesn't sound like you want to buy more assets that you're actively going to invest in, but you might invest in other people's projects. I'm just curious how you think about the world of investing.
It's a great question. If you go to my website, I basically have two focuses. One is lending, and then the other one is public market real estate investing. So that's something that a lot of people don't even know is a thing or is possible. They think that you can only invest in real estate through Main Street, but you can also invest in real estate through Wall Street. And so that's something that we, through that original fund that I started, that's another, accidental thing where we just, stumbled on this one deal that it was a JC Penney. I'm sure you've heard of them. Mm-hmm. They filed bankruptcy back in, I think, late 2020, and these two big mall operators purchased them out of bankruptcy. And what they did was they basically separated the operating business. The JCPenney, you go into the mall and you shop and buy whatever. That's their operating business. They separated that from all their real estate. And they took all their real estate, which at the time that we got involved was 130 retail properties. They took those, spun it into what's called a liquidating trust, which is exactly what it sounds like. It's meant to be liquidated by a third party over time, and then they gave those shares to all the creditors that were, that were
owed money.
Yeah, were owed money. Yeah. And those shares traded over the counter, which, if you know anything about that, it's not on a major stock exchange. It's very illiquid. It's often glossed over by the big investors. So I stumbled upon this, and basically I was able to look at all their properties and determine that they had 17 years left on a 20-year absolute triple net lease where the landlord was responsible for nothing. And at the current implied cap rate based on the price it was trading for, we were able to buy a position in this at a 14% cap rate, which, if you know anything about real estate, is just insane. Mm-hmm. It's like the cheapest price ever. And meanwhile, they were taking the properties that were owned by the trust and they were selling them privately. They were selling them to real estate investors privately. And the average cap rates they were selling them for were around 7%. So, it was purely an arbitrage play between what the public market valued this portfolio of properties for and what the private market valued it for. So over time, those were liquidated, and our fund did very well on that. And so that's kind of to go back to your thing. The cash generator is the lending, is the hard money lending, and then the more wealth building stuff is finding mispriced opportunities that exist in the public markets.
I love that. And I love the language that you use, right? Finding mispriced opportunities, because it's true. I remember reading this book by Sam Zell.
I love him.
Yeah, he's a character, right? He's a character. For those that don't know, probably one of the greatest real estate investors of all time.
Yeah.
That you've never heard of, right? Unless you're really in the game. He wrote a book, being what is it? Am I being too?
Am I being too subtle?
That's it. Am I being too subtle?
It's a
right?
Great book.
Yeah. Am I being too subtle? And in that book, he talks about like all of the way that he arbitraged things when he saw that there was a discrepancy between like asset value and what things were getting, like true asset value and what things were getting priced at. Things like, an example, like, because he started diversifying himself into other things. Like, one of the things was he bought a railroad because he looked at like just melting down the metal of the entire, like all the trains was worth more than what he was buying it for. And so it was like kind of like that complete no-brainer way of looking at it. He said like, okay, if I had to melt down all of this stuff, is it worth more? Sell it for scrap. Will I make more money than what I'm buying it for? And the answer was yes. And so it was like, cool. Like, it's almost like, it'd be like buying a house at a below replacement cost, right?
Exactly.
In our market. So it's a great book for anybody that hasn't read it.
He's a lot of lessons to learn from him.
Well, I'd love to learn a little bit more about like you and your background. Where did you grow up originally?
Haymarket, Virginia.
Haymarket. Okay, so right in our backyard.
That's right.
And what were, just out of curiosity, like what were some of the things that you grabbed, like whether in high school or in college, some of the classes that you gravitated towards, right?
None.
Or interests that you had? None.
Zero.
You were like...
Zero.
So what were the interests you had, right?
I got sober at 19. So as you can imagine, my interests pre getting sober were a lot different than what they were post getting sober. So I just didn't really, I was never interested in school. I was never interested I went to 2 different colleges and I didn't even graduate. So I was never interested in any of that. It was once I got into, I wanted to get into the mortgage business because I saw that there was no ceiling to, like being a real estate agent, there's no ceiling to, the income that you can generate, and what you put into it is what you get out of it. And I liked that as opposed to a fixed salary. I just was never wired. I wasn't, I'm not wired to be on a salary or anything like that. So that was what I really gravitated towards, and just being in the mortgage business, I think it's one of those things where real estate just makes sense to me. It's like it's like the scene in Good Will Hunting when he's talking to his girlfriend about the piano and how, I forget which musician it is, but he talks about Mozart or one of those guys, and he says, when I look at a piano, I just see a bunch of keys and a block of wood, and that's all he sees. But Mozart looks at it and sees this, this thing that he can create from, and it's just this totally different thing. And the context was that he was explaining to her how he looked at the world and how he saw math equations because he was this genius. And I feel like that to some level, obviously I'm not nearly as gifted as he was in the movie, but just looking at a real estate deal, I think that it just kind of makes sense to me. And I think that what I'm decent at is looking at a deal and figuring out the 1 or 2 variables that everything hinges on, and that if you reduce it to the ridiculous, what is the worst case? What is going to make this deal fail? What's going to make it succeed? And I have learned over the years that is something that I enjoy doing and am decent at.
Well, the reason why I asked you that question, which sounds like an off-the-wall question, is that I hear a very thoughtful, educated guide to the game. And you're young, right? Was there a mentor? Was there did you go down the rabbit hole obsession on self-development, reading, training? I'm just curious where that came from.
Yeah, I have a very obsessive nature. So when I get interested in a topic, I just want to read every piece of material there is about it, and just it's not like I'm thinking, oh, I want to become an expert and I need to do this, and it's just I'm so interested in it that I can't help myself but just look at it, study it, learn it. Um, so
Okay, well, that's what I'm sensing.
yeah, yeah.
That's what I'm sensing. That's kind of why I asked the question, because I can hear that, and I could oftentimes when I'm talking to people, I'm playing chess in my head. It's hard for me to explain that. I could understand how they're thinking about some of the frameworks of their life and how they think about the business, and so I see that. Well, what do you want out of this in the next 10 years? Some people don't really know what that is, right? They haven't created a 10-year vision for themselves, although you should probably create a 10-year vision, right? And I'm not saying you specifically, I'm saying the listener should really be thinking about, hey, what do I want this to look like 10 years from now, 15 years from now, 20 years from now? This is about playing the long game, whether you know it or not, like it is. So I'm curious if you've given that any thought.
Yeah, I have, and I don't have a rigid thing written down with this is what my goals are and this is just anything like that. But I have a vision and I have a kind of a framework for things, and my faith is very important to me. I'm a believer in Jesus, and I have everything from a monetary standpoint. There's nothing that I want further. There's no material impact that any more money could do to my life. Like I just, I'm not into cars or boats or anything, any of those expensive hobbies. So I just, there's nothing more that can be done there. There's no utility that making more money has other than to be used as a tool. And what I am really focused on is getting the gospel into places that there is no gospel, into the unreached places of the world. And that's something that's very, very important to me. And, I think that, I can go about that from a monetary standpoint and use the abilities that I've been given to do that. So that's something that, that I am focused on and want to continue to focus on into the future.
Well, in our 7 levels of freedom framework, at the very top is, and I talk about it often, it's impact, right? There comes a point where you realize, okay, I have what I want and need, and people give back in different forms. Some will give back to a school or a university or through mentorship or through spreading the word. And it sounds like that spreading the word is your form of impact, that your business has given you the ability to be able to say, like, okay, I can breathe. I have what I want. I realize I'm blessed, and I want to make sure that I communicate this and help other people, right, through this process. Where did that come from, right?
I think just man, that's a really good question. You put me right on the spot there.
I mean, I'm telling you, this we go deep on the entrepreneurs, right? It's like what I'm curious about is like there's so many different ways that you can create an impact, right? But you chose that way. And it was because more than likely there was a life event that occurred. Or maybe you were raised in a household and that is the pattern that you picked up. Or maybe it was anti the household you were raised in, and so you picked up that. So I'm just curious about where that came from.
Yeah, I think it was my upbringing was awesome. I have 2 wonderful parents, and they really instilled godly beliefs in me, and so that is certainly a huge part of it. But I think over the years, just drawing closer to the Lord and getting into the Word further and further and deeper. I just think that helps. I've I have a 3-year-old and a 10-month-old. So,
Oh
when you
man.
have young kids, that certainly shifts your perspective. And when I say that I want to impact places that don't have the gospel and get them the gospel, there's always a humanitarian component to that too. So I don't want you to think that it's just like we get people the gospel and all right, see you later. There's also a medical component to that. A lot of these ministries that I like to support and do support have that kind of component to them too, where they're getting people the gospel, but they're also providing medical care that a lot of these places don't have access to. So, that's. I hope that answered your question. It's my
What?
upbringing, and yeah,
Yeah, 100%. As you climb the journey, and like just kind of go back, like in the beginning, there's this like self-awareness. I want to be an entrepreneur, but there's this pull and push of like, okay, well, there's some risk associated, but there's massive reward if I'm able to execute the play. If I believe in myself, I'm going to execute the play. And that we call that level one. You're slaying the dragon of doubt many times when you're newer to the game. Like you've got to bet on yourself, and you're not going to rely on a W-2 income, right? And then level two is you got to learn how to create the pattern of predictable money. Like how do I create predictable money? And you were doing a couple different areas of creating that money, whether it was fixing and flipping, or doing mortgages. And then once you find your thing, that's when actually your income explodes. It's like your income explodes once you find the thing. So level two then brings, as you approach level three, brings another problem. And many people stay at level two. Level two, you could be a self-employed person and make an incredible living, especially in the lending space. I have met a number of super wealthy old dudes that do what you do and have done it for 40 plus years. And they just print cash with small teams, right? Like 3 people, 4 people. So it wasn't like a massive business. And so you could be like a self-employed business owner there. But level 3, like if you get really good at level 2 and if you're pretty ambitious, the problem is it creates another problem is that you're so busy. You need to bring on additional people, and you've got to start running it like a legit business. And that's a whole nother skill set at that point in time, right? There is a leadership component to it. There's a financial component to it. Now, it's not a journey that's for everybody. People, like my best friend, he's like, yeah, I'd prefer to keep it small and keep it all, right? And invest the difference. And that's a path. There's others that have been like, yeah, I want to grow through people. I want to build people. And so they go on this leadership journey. And then level 4 is investments on purpose. Level 5 is leadership on purpose. Level 6 is scale, right? Mm-hmm. And level 7 is impact. But you can win the game at between level 2 and level 3 and level 4 if you create, like I think of the thing that all of us should be building at, whether we know it or not. So I'm going to verbalize it. We want to build these businesses and these assets that pay for our life, right? And so you've got this active income business, and it generates capital. And hopefully what you're also doing, sounds like you're doing it, is you're investing in assets, whether it's other businesses, other sponsors, whatever it is, that pay you while you sleep. So that at some point, all of that money, aka highly leveraged passive income, exceeds your lifestyle. And if you keep your lifestyle lower, because you're not into the cars or the boats, you realize, oh, I untrapped myself. I am free at that point, which so many people yearn for, but they keep themselves prisoner by wanting more. Does that make sense?
Exactly. Oh yeah. We all know plenty of people that that do that. Yeah.
Yeah. And I think as a lender, you have a unique perspective because you're looking at money all the time, and you're thinking that way, right?
Yeah. When I was doing mortgages, you pull credit and you learn a lot of lessons from other people and the decisions that they make. You know?
Patterns.
Yes. You
Yeah,
see
you see
someone with
certain.
a 580 credit score and you see why, and you see that, they're not able to buy a house and build wealth that way. And then there's people with 800 credit scores that live below their means, and they're, it just, it, things go a lot smoother for those people. I've
Yeah,
seen.
life is easier, right? Life's
Yes,
easier. I was thinking about this the other day. It's like the decisions you make in life just compound over time, right?
exactly.
And those decisions are either serving you or they're hurting you. And so, just like compound interest, right? They all lead to down somewhere, down a road. Just got to make sure they're leading down the road you want them to lead, right?
That's exactly right. That's 100% right.
Well, are you still raising capital for your fund right now?
I am, yeah.
Okay. So tell us a little bit about that. What does that look like?
I can't get into specifics on the fund just because of the structure of it. But if anyone wants to explore further, they're more than welcome to reach out to me, and I can talk further on it. But yeah, it's I can talk about what we do and the
Yeah,
type
let's do
of
that.
loans that we make and the
Let's talk
the
about that.
specifics there. Yeah. So our typical product is a 9-month term. We have a couple extensions, a couple 3-month extensions built in for a fee. But it's a 9-month term, and we charge a 3% origination fee, a $700 flat doc prep fee, and then the interest rate is 12%. So that's our standard product. Now, there's a couple guys that I have worked with, and we've tweaked things based on their project, to make it work for them and for us. We're at the end of the day just trying to hit a certain annualized return, and if we can hit that by collecting more points or less points, higher interest rate, lower interest rate, shorter term, longer term, we're fine with it. We just want to have our capital earning a decent return, and to give an example, somebody that I work with, he buys tons and tons of properties, and there's a lot of properties that he's recently been buying where they only need like 8 or 10 grand, just paint, carpet, the basic stuff, and then he turns them into a rental. So that rehab work takes a month or so at the most, and then he refinances it into a DSCR loan. He has this DSCR lender that he's worked with a ton, and it's a pretty smooth process for doing that. And he calls me and he's like, hey, I love you, but can we do something about the points on the front end? I'm like, yeah, we can, but we have to earn a certain return for our investors and for the fund, and so let's figure something out. So we basically settled on where we don't charge him any points, but we charge a higher interest rate, and it works for us, it works for him. And by having control over your capital, as opposed to being a correspondent lender where you just do a loan and then sell it, by having control over our capital, we're able to do stuff like that. So it's pretty cool, especially compared to when I was a loan officer and everything is just a rigid black and white
You're the
box.
underwriter.
Yep, exactly. I'm the underwriter.
Yeah,
Exactly.
you're the originator. You're the underwriter. You're like, hey, as long as I can make the rate of return, and you're probably evaluating volume and relationship, and there's a lot of factors that go into it. It's not just like you said, like a little cookie cutter box that it's like you check the box or not, right?
That's exactly right. It's very relational. We recently have been using, speaking of obsessions, AI has been an obsession lately, and trying to just incorporate that into our workflows and to make better decisions, to streamline things. So yeah, there's a lot of, it's not just a Fannie Mae, here's our guidelines, and you either fit in it or you don't. It's a lot more nuanced than that.
Couple last questions. I'll let you get on with your day. But you brought up AI, and I think all business owners are testing different things to increase efficiency, decrease cost, all the rest. I'm curious, top 2 or 3 things that you're using AI for right now in your business.
Yeah, great question. So we have recently, I've created this hub. I call it the hub because we have all these sources of truth, like my email, Google Drive. We have our loan management software where all of our borrowers go in, upload documents. It's where our loans live, if you will. There's all these different sources of truth, but nothing really connects, and it's all siloed from one another. So I created this hub where we can see, our liquidity situation. It talks to our bank accounts. It looks there. It looks at, the commitments that we have upcoming. It looks at our loan pipeline. It looks at just the loans that we have out. And I can just see everything from a bird's eye view. It's kind of like my cockpit of the airplane, if you will. And that has been really cool. And I've also, there's a lot of repetitive tasks that it's like I can go out and I can find some kind of SaaS, software as a service. I can find some product out there that solves maybe 70% of what I'm looking for, but the remaining 30% it doesn't hit, and it's got a lot of stuff that I don't need as well that I'm paying for. So I have, with the advent of Codex and Claude Code, it's been incredible to, basically think of what you need, think of the problem, and then be able to verbalize it and turn it into an actual working solution. It's amazing.
It's crazy, right?
Yeah. So I've done that a lot.
Yeah. We've used a tool called Lovable .dev to help us with some of that stuff. But I love the CEO dashboard, essentially, the hub dashboard for yourself, where you're checking on liquidity, risk. I could see it. It's like, hey, what is our, what's our liquidity position? What's our risk position? Like,
exactly.
It's so interesting because recently I've been obsessing over wanting like daily number dashboards, and we track it daily already. But once the business gets really big, and it's not me, right? I'm not responsible for production. The only thing I can really pay attention to are some of these key KPIs like appointments and listings taken, and I want it real time. And I want it so that I know, are we ahead or behind where we were this time last year? I want green and red to be like green good, red bad, right? Like, let's make it super simple so I can just look at it. If it's an ocean of green, awesome.
Yeah.
If it's an ocean of red, bad, right?
Yep. Exactly.
Because we move so quickly, and so you need to bring in, like you said, all of this data. And the way our business operates today is we actually have 7 different businesses that all feed to a core holding company. Mm-hmm. And so all of them have their own P&Ls with their own KPIs. And so I'm in each one of those businesses with each one of those leaders, making sure that we're on track with the numbers, the leading indicators that will get us the outcomes that we're looking for. But it feels like a lot, which is why I'm like, guys, we need a really good one global picture of all of it.
Yeah, I mean, I'm not nearly. I don't have to balance all those plates, and I still wanted, to be able to see everything from a bird's eye view. It sounds like for you could greatly benefit from something like that.
Yeah, we need to spend more time working on that. So that's awesome. You built it yourself, or did you have somebody build it?
No, I did it. I mean, Claude. Like I recently have switched from Gemini and ChatGPT to Claude, and the newest model of Claude is just so good and so intelligent, and it just understands your intent so well that I use that to kind of translate for me and create these prompts for the coding agent, which is either Codex or Claude Code.
That's awesome, man. Yeah, started doing some research on it. Well, Will, if people wanted to get a hold of you, actually, there was one last question. Are you only lending in Virginia, or where else are you lending?
Right now, just Virginia, just because
Okay.
it's my backyard. It's what I
Yeah.
know. It's where I'm comfortable. It's a good state when it comes to foreclosure laws. So yeah, it's where I'm focused.
Yeah, I will tell you. So I've through the years have met lots of different private and hard money lenders, and the ones that I have found that have weathered all storms and been extremely successful and lived the best lives just knew their backyard better than anybody else and
Exactly.
decided not to go outside of their backyard. The ones that decided that their risk appetite was huge and they wanted to build big things, most of them got slaughtered. Right?
Yeah, no, I've learned from people as well. Not only in lending, but also just in real estate development. The guys that veer outside, they're based in Virginia and they start going down to Miami. It's like, man, you just don't know. Real estate is so localized, and having that local knowledge is just so vital that it's just hard to go outside of your domain of expertise. And if we continue growing and scaling to where we're forced to look outside of the markets that we're in, then that's a great problem to have. But we're going to do it organically, and we're not just going to look at some random market in another state and start operating there.
Well, one of the reasons why we built Grid, our investment community, the way we did is we realized that real estate in Richmond is so different than real estate in Northern Virginia, which is different than like PG County or St. Louis. And so we needed operators in those markets that could smell the dirt and feel the ground and understood, what was happening at the local level. And here's my pitch for anybody listening right now. On June 1st and June 2nd, we're bringing all of those leaders and all of those communities together for GridCon 2026 in Tyson's Corner at Vallow Park and Bull Run Winery for operators. So, Will, you're invited to come, my friend. I'd love to have you.
I will be there.
We're going to have hundreds of real estate investors all, playing the game from different angles, from lenders to people running RV parks to syndicating large apartment buildings. So, love to have you, man. And I'd love to have, I'd love to have our Grid community out there in full force. So, with that, my friend, thank you so much for joining us on the Income Flip podcast.
Yeah, thanks for having me, Rob.
Sure thing, man.